This was one particular result within the cement universe that most of the market participants were eagerly waiting for, especially given the fact that it's the largest cement company as far as India is concerned. So UltraTech Cement is the company that we are talking about here, and the company came up with a very robust operational set of results. Now you're talking about the cement universe. Earlier you had ACC, you had Ambuja, some of the big names as far as the cement universe is concerned, and both of them managed to beat street estimates as far as the operational figures were concerned. So the results of UltraTech Cement were no different. When you're talking about the revenues or the top line was in line to marginally below what the street was anticipating. However, it shouldn't be construed given the fact that operationally the company has more than managed to make up for this volume loss seen. The other thing you have to keep in mind, when you're looking at the slight miss as far as the top line is concerned, is the fact that number one, it was a COVID quarter, it was a washout quarter, construction activity had come to a standstill. The company did not have migrant labor force to go ahead and actually see any kind of volume offtake. So amidst all of this, the company has managed to see a volume degrowth of just around 22%, whereas analyst estimates were much higher, northwards of 25 to 30%. So, you're talking about the top line coming in line. Realization trends were something that were quite strong. We have kept highlighting at ET now about how cement prices have been resilient despite the kind of lockdown and very weak volume offtake. The other thing that you need to keep an eye out for is the operational EBITDA number, or the metric by which you actually see the operational or gauge the operational performance of the company. So operational EBITDA has come in way above what the street was anticipating, much above what the ET now poll was anticipating. So three key reasons for that. Number one, you're talking about realization trends being much higher than anticipated. Number two, you're talking about petcoke prices. Remember, most of the companies are increasing the usage of petcoke as a raw material in their input mix, and UltraTech 2 is no different. So again, petcoke prices going down is a bit of a breather, and that helps decrease the cost. Lastly, most of the companies are working very hard to reduce the fixed costs, given the fact that the outlook remains uncertain and bleak even at this point of time. So all of these three metrics have helped decrease the operating costs and thereby increase the EBITDA per ton as well as the EBITDA. The EBITDA per ton has actually increased quite significantly on a year-on-year basis, coming in again above what the street was anticipating. The other thing you need to keep an eye out for as far as UltraTech is concerned is the update as far as some of the subsidiaries were concerned, or some of the recent acquisitions. Company saying that they are progressing, and in fact the company has also managed to go ahead and reduce the debt on its balance sheet quite significantly. So the net debt to EBITDA is also something that has gone down quite significantly. So again, UltraTech 2 has outperformed, as in fact you are talking about the cement universe coming in with extremely strong and robust operational performance despite the pandemic infused lockdown. So very good set, and the stock too has been performing quite well.